Carvana stock jumped roughly 10% in the Friday aftermarket session, creating one of the most dramatic moves of the entire week. The surge came immediately after the announcement that Carvana will be added to the S&P 500 index. This happened only hours after the stock closed regular trading at $400 per share, sitting right near all-time highs. The after-hours reaction highlights how significant this milestone is for both the company and its shareholders, and it has positioned Carvana as one of the most talked-about stocks heading into the weekend. Carvana has experienced one of the wildest multi-year journeys of any company in the market. It went from being written off by many investors to staging one of the most impressive recoveries in recent memory. Now the company is being elevated to the S&P 500, which is one of the most important equity benchmarks in the world. Inclusion in the index leads to buying from trillions of dollars in index tracking funds. These funds must purchase the stock automatically, which creates a strong structural tailwind over the coming weeks as the rebalancing takes place. This surge did not occur in a vacuum. Even before the S&P announcement, Carvana had been displaying clear momentum throughout the year. The stock has nearly doubled year-to-date, driven by improvements in unit economics, logistics efficiency, and retail sales growth. The company reported retail unit sales growing around 44% year-over-year, a standout result in a used car environment still dealing with affordability challenges and high interest rates. These operational improvements have been central to reshaping the market's perception of Carvana. In recent quarters, Carvana has also scaled its reconditioning centers and increased processing capacity. This expansion enables the company to handle more vehicles, increase turnover, and improve margins. Carvana's online-first retail model continues to disrupt traditional used car dealerships, which still rely heavily on physical lots and slower operational systems. Carvana's ability to combine logistics, data, and customer convenience gives it an advantage that is now showing up in its fundamentals. The contrast between the calm regular session on Friday and the explosive aftermarket move demonstrates how powerful the S&P 500 announcement was. While the stock closed up only slightly during normal hours, the real reaction began once investors learned that the company would be added to the index. This kind of announcement often leads to short-term volatility and sustained medium-term strength due to the mechanical buying that must occur as funds adjust their holdings. There was also a recent insider sale by director Michael Maroon, who sold nearly 30,000 shares at around $400 each. The sale was executed through a pre-arranged trading plan. Although insider selling always raises some investor interest, there is no indication that the sale reflects negative sentiment from management. Insider transactions can occur for many reasons that are unrelated to the company's outlook, including tax planning or diversification. The valuation debate around Carvana remains intense. Some analysts believe the stock is priced too aggressively and assign fair value significantly below current levels. Others believe that Carvana has captured a sustainable competitive advantage and that its long-term potential justifies higher valuations. The range of analyst estimates, from around $60 to over $500, reflects the uncertainty about how large Carvana can become in the used car retail market and how much margin expansion is achievable. Macro conditions also play a role. Used car prices, interest rate trends, consumer affordability, and supply dynamics all influence Carvana's performance. The broader expectation that interest rates may stabilize or decline over the next year has helped boost sentiment toward companies like Carvana that rely on consumer financing. If the financing environment becomes more favorable, the company could see even more demand. The momentum behind Carvana also has a psychological component. A company that once faced bankruptcy concerns and was heavily shorted has now completed a dramatic turnaround. The stock's rise from extremely low levels to S&P 500 inclusion creates a powerful narrative. Investors respond strongly to stories of resilience and recovery. The company's progress has removed many of the existential risks that previously weighed on the stock, leading to renewed confidence from both retail and institutional investors. Looking ahead to next week, the stock could experience heightened volatility. Index rebalancing periods often create short-term fluctuations as funds adjust their positions. Traders may also attempt to take advantage of the increased volume and liquidity. At the same time, long-term investors may view this moment as validation of the company's trajectory, rather than simply a temporary price spike. The real significance of this moment is that Carvana has transitioned from a speculative turnaround to a company with legitimate operational strength and a position within one of the most widely followed indexes in the world. The S&P 500 inclusion reinforces the idea that Carvana is no longer a fringe player but a mainstream component of the U.S. equity landscape. The 10% aftermarket jump is a reflection of both excitement and structural realities. Forced buying from index funds, strong recent performance, expanding capacity, and improving fundamentals have all converged to create a powerful upward move. Even if the stock pulls back in the short term, the inclusion remains a long-term milestone that will influence how the market values Carvana from this point forward. Carvana's journey is now entering a new phase. The company has earned a place among the largest and most influential companies in the country. Whether the stock continues climbing or experiences consolidation, the key takeaway is that Carvana has demonstrated resilience, adaptability, and a capacity for growth that many once doubted. The momentum created by this announcement will be a major storyline heading into the coming weeks, and it marks a defining moment for both the company and its shareholders.